Alright. We got the forex pair, New Zealand dollar versus Japanese yen, my usual 10 years worth of data, my monthly candles. And I was going to deep dive a little bit today on support. And a viewer were talking about support being, or let's say resistance in this case, not being a... See, we draw a straight line, right? And our brain wants to think, well, it's definite. We're binary, 0 and 1. This is the definite support. This is definite resistance. But it's pretty much just a zone. And that's what candles give us, is the wicks. You see all these, the opens and closes where I draw my trend lines, or my pattern, or my resistance support. All the wicks above that, that's the noise, that's the malleability, the flexibility. It's the price action's going, it's moving, and then, it goes up. Price is up here for like, this is a monthly candle, so it could have been here for a few days. And then humans place their orders for whatever reason. They analyze news releases and all the reasons that they choose that the price is, they want to sell at that price or whatever. And then the monthly candle, what it does is closes where, more precisely on that line of where that resistance should be. On the dailies, you would have had closes above that, above those wicks. On the weeklies, you would have had closes above maybe above this line, above the 68 level. And I'll zoom in on those time frames and we'll see. And monthly candles, just the more time you wait, the more chance you have let humans, get to work and look, this is what happens, and then place orders. It just encompasses all that noise, all those transactions. You get a clearer picture. So breakouts on monthly candles, like this one here, have more probabilities of reaching their possible targets than on the daily. It doesn't mean that the daily doesn't reach their targets. It just, monthly candles give me a higher chance of reaching them because of that, the nature of the whipsawing action of trades being placed and adjusting, and over time. It just doesn't happen from one day to the other, right? Or else we'd have like straighter lines in our in the stocks. Stock news release, and then I thought, okay, it moves up, straight line. No, the humans need time to digest, and the monthly kind of smooths that out. If I go on the daily here, it's probably or weekly, a lot more erratic noise within it. So here's my target on the monthly chart. I would enter here, 72 level. And you know what I'm going to do? I'm just going to draw some lines. Okay, see, this is my entry. This is my sell stop. This is my risk. And this is my reward. So it's just like maybe 1-to-1 or maybe 1 to 1.2. Not a super duper risk reward. But if I reach my reward, my targets, let's say 3 times out of 4, then you don't need those 8-to-1 ratios or 6-to-1 ratios. You could be 1.5 to 3 is excellent on a monthly chart if you get those ratios. If you get above a 3-to-1 ratio on a monthly chart because you're having a 75% success ratio, then that's awesome. On the daily, I used to have a ratio probably under 50%, 40% of reaching my targets. So I'd lose a lot of, 1%. 1% of my NAVs used to go down, getting whipsawed out. But the on the daily here, it's probably 8-to-1 ratio. We'll go see. When I have 8-to-1 ratios, 6-to-1 ratios, and those happen more often on the daily charts. But I'd get whipsawed out more out of them, and that's where the math comes in. The trade-off comes. You want to get less whipsawed, play less trades, and just look at your charts towards the end of the month, like I do. Well, now I look at them pretty much every day because I'm doing the podcast. But if somebody wouldn't be doing podcasts, they could just look at they'd wake up at the end of the month, go through their charts, their alerts, whatever's been triggered during the month, and then go place orders on the first of the next month, and then just go to sleep for the whole month. Go on vacation, Cuba, and just do your regular other stuff. Daily, well, you have to check every daily close. If that's what you're playing, daily candle breakouts. Every daily close, because if you miss one candle, your risk to reward drops, right? The price action starts moving away from that breakout line, and then it's just less forgiving. Then you have the compromise, which is the weekly, and the weekly, you only have to wake up towards the end of the week. Friday, look at the charts, or Saturday morning, and place your orders for Monday morning to get in. So support lines, that's how they are. They're more like levels, and then they have to adjust, and then they close below it. So if you have a sell stop too close to that breakout line, then if ever there's whipsawing action and the price, like there's a big news and it retraces within that boundary, because again, it's not like a hard line, but even if you were right in the direction was going up and it was a valid breakout, then you might get triggered out. So the further away you are right now, what's the delta? I see 71. I would have entered at, let's say, 71.92. Sell stop 67. That's 4 cents. 4 cents and a half difference. Let's go look. Let's drill down. 1 year daily. Scoot over my chart. Zoom, 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 zoom. Zoom, 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 zoom. Wow, 10 years of data is far, right? Or am I not there yet? Where are my lines? Oh, where am I? What? Ah, there we are. Wow, okay. That was a while back. Okay, so now I'm just gonna make this more. Okay, here we are. So 1 year of data on the daily, not super duper, because you need more data on that. You don't see that. You don't see the prevailing move, right? On the daily, you could have see the whipsawing action. On the daily, you could have thought you had a breakout here. Look at that, man. There's so much noise. I'm trying not to cherry pick situations. Just see. So let's say here on the daily, this could have been a pattern. And see, the less time the pattern exists, or is trying to trace out and breaks out, the less you have chances of reaching it. It's just like noise, humans need time to put in orders, and for the volume, the bulk of that action to be seen in a chart for something that's like valuable and which will respect better classical charting principles, you need more data, you need more time. But I know there's day traders, and this is all they need. This would have been a target. So what happened here? Play on this candle breakout. This is your target. And not a super duper risk to reward ratio, but let's say you would have went in. Price reverts. Remember, just orders going up and down doesn't mean you're wrong with the trend. But your sell stop would have been, whoa. Okay, was it low of this candle? 65.95. And the low is 65. Wait, low 64.94. No, sorry, low is 64.98. And the low 65. Wow, so you would have not been triggered out. If you would have put your sell stop and not get greedy right under the wick. Sometimes you have the feeling, I'm just going to put a little higher, get a better risk to reward. It's not going to come back down. If you would have respected that, on this case, it would have been okay. 1 day, 2 day price action just on top of your sell stop, and only to reach your target 3 days later. So breathe in, breathe out. You're closer to your price. a lot less pips in between your entry and your sell stop. Any type of news, the wind blows in the wrong direction and snow starts falling and the price action moves down because that trader didn't go into work to place those big orders for his boss, and you're out. So a lot less wiggle move. And let's just go see it. Okay, here was my breakout. See on my monthly candle chart, my breakout line would have been right here. The daily, you probably did not see that. You don't have the same target. But let's say the daily, you would have had more. You would have had more data. Could you have drawn your resistance there? Let's see. Okay, let's see. Here. So eventually you could have said, okay, my resistance is here. And you see where I drew my resistance for my monthly? Most of the time, sometimes they share. You see here it shares the same support. The monthly, this is noise. See, I don't see these candles on a monthly. This is just, it's my wick, right? Oh, there's noise. It's on a breakout. So somebody could have thought it was a breakout back here and played it on the daily. There's so many cases. Charts are beautiful because you just, if you focus on, no, what I do? I moved my price action. Sorry about that. All right, let me go back all the way here. Okay, somebody who would have, I'll get back to that monthly breakout. Somebody could have, on the daily, so I'm going up, retrace, and right here, they could have thought it was a breakdown, a breakout. I'm just trying to keep the arrows and some candles there to have a better vision. And this is a classic case of being whipsawed on the daily. 1, 2, 3, saying, oh, that looks nice, it's tight. Breakout candle, look at that nice target. And then you get triggered out. It never comes back for a while. And then you get burped. You lose that 1% and then you move on. So these type of cases I used to run in when I was on the daily more often than on the monthly charts. All right, let's just go back here. So right now, time moves on, candles are added, chart morphs. All right. And here is my monthly breakout line, but not on the daily. The daily needs more candles for morphing. Okay. And here it is. Oh, there you go. Breakout for the month, the daily. So what would the daily do here? The daily's pattern would be the bottom, would have a bigger, further away target. I don't know, this is greedy. Would have had a further away target. I don't know if you would have considered this as a big bottom. I'm not sure. It's when there's a lot of white space like that, I give it less probabilities of reaching its target. I like when there's more, the pattern is a rectangle close to a breakout line. So the pattern could have been shallower here. I don't know how someone on the daily could have seen that. And let me see that. Oh, maybe. Perspective, right? Oh, it looks nicer now. Cheating myself into entering a trade. So you see these targets? Just useless to put an alert. Further away target. Better risk to reward. This would be your breakout candle. So you'd enter here. And you'd put your sell stop right here. This is my risk. This is my reward. That's like 1, 2, 3, 4, 5. Maybe 6-to-1 ratio. That's like, bam. I'm greedy, man. I'm in. Let's put the whole shebang in there. And here's my entry for my monthly candle. And here's my entry for my sell stop for my monthly candle. So higher risk on the for monthly candles, closer breakout, closer target, higher probabilities of reaching that target, less risk to reward. Do the math. Eventually you'll find out what's your percentage, your win percentage that's reaching your targets, and then make sure you have the appropriate risk to rewards selection for you to be able to profitable. Simple math. That's all the math you have to do. That's all. You don't need more math than that for trading. And what happens here is you don't have consideration for previous support turn resistance, my concept of walls. So if I go all the way back, on the monthly, we'll go back on the monthly, but there was a wall here around this area. So the target on the monthly was right below the wall, below eventual resistance, increasing my chances of reaching that target. On the daily, well, you don't know that it exists back then. You just no consideration for that, and since you don't consider that, that could be something that's going to slow you down on your target, on your path to target. And so what happened? You see, now we're reaching my monthly candle breakout line, and my breakout, the end of my entry. But on the daily, you would have had to suffer, going up, then going down, retracing, getting close to your breakout, your sell stop. So never cheat on your sell stop, and then it goes back up. All that action, that intra action, well, I would have avoided that action on my monthly candles. And there you go. The price goes up, 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 and they both reach your targets. Monthly would have reached its target here, and daily right there on this candle here. So on the monthly would have been a lot cleaner, less whipsawed, and on the daily you would have had to suffer just this little minor heart attack right here. All right, so that's about it for my drill down on monthly candles, on wicks protruding outside of those support lines, those resistance lines, and how monthly candles, they just smooth everything out. See, here it is. There's a breakdown pattern here. This breakdown, this support now is turned resistance, and that target for the daily is just a little bit inside, so you could have gone faded that action. All right, let's move to today, because that's what counts. I want to make sure I set my alerts. So here's the 1 year pattern, a little bit more 1.5 year pattern for that pair. Set my alerts at the 83.14 level, and set my other alert at the 76.50 level. So price action is right there. Measured moves, right there. So we'd have a move about to 90 if there's a breakout, and a move to about 70 if there's a breakdown. And we'll put alerts there just in case I never get back to it. And those targets, well, these targets, you have to be careful, right? Because on the bearish side, we'll see what happens, but you can have some support here and some support here, support turn resistance, some resistance turn support here. So there's some noise on the way down. So we'll see how the price action goes. Maybe the chart pattern is going to enlarge, not break down below that, but we'll have, I always like trying imagining here in my black area. Maybe the price action one day is gonna have lines here, and you'll have a bigger, maybe the real move to play will be this one here, below here, all the way here to this area. So you have to wait. But right now the real pattern to play would be this one. Am I missing something? Is there some are we reaching right now a channel? Maybe that's why you can't jump the gun. There's some maybe more prevailing pattern on the way. And no, just for now, keep an eye on that. Put your alerts. They're free at key levels, and come back to it when you have the feeling that it's the pattern A++ setup, and you'll know. The more you look at them, the faster you'll find out that that's the pattern that'll give you success. That that has a good risk to reward, that has no turbulence on the way to target, and you'll just play it. See, the RSI is drilling down. There's no, it's neutral. It's figuring its way out. All right, let's leave the humans place their orders and move that price action to give us a skewed risk to reward in our favor. All right, see you soon, guys. That was a long one. Ciao, ciao.